Hello, hi. I'm bringing you a analysis or review of gold, the tricky metal. Okay, from an intermarket analysis perspective, I have been requested by a subscriber to have a look and see exactly what's happening. Now, I did forget to do it yesterday. I have just remembered, given the gold's dip. I've just read an article about individuals talking about the drop in gold today. Obviously that was in concert with the Aussie, the Kiwi and the Euro falling as well. So it basically meant that obviously given the fact that USD JPY rose from 114 and obviously sterling fell as well, so that basically tells you it was more to do with a dollar driven sell-off, okay, or dollar rally sell-off. Okay, so let's just try and examine exactly what's happening with gold. Okay, so why did gold fall today? It fell today because of the lower inflation data out of China overnight. Okay, now gold is obviously known as an inflation hedge. Okay, given the fact that obviously commodities moved higher, obviously you'd want to dump gold because equities are also an inflation hedge. So if they're in demand, obviously gold will be out of demand. Add in a lower inflation picture. So obviously if you have lower inflation around the world, i.e. as we already know from Europe or in a deflationary scenario, so obviously that hasn't helped gold. And obviously China, deflationary scenario, and obviously that's what led the sell-off in gold today. Now that's a factor. Okay, now the counter argument to that would be that yes, the BOJ has announced 80 trillion in additional QE, so therefore obviously QE equals inflation down the road because you flood the monetary system with excess supply, and obviously that can create inflation down the road. Therefore you'd want to be buying gold, and so therefore why has gold not gone higher? That's a very interesting question. Okay, also adding the fact that Mr. Draghi is still dangling a QE carrot, and obviously given the fact that the deflationary concerns are there in Europe, okay, well that just basically strengthens the argument of QE. Therefore you'd want to buy gold to front run that move. Okay, so again that doesn't really make sense at present. Okay, so there are certainly there are two fundamental currents in the market that really don't justify the price of gold being at 1140, 1150 region. Okay, so from my perspective at this very juncture, am I bullish or bearish on gold? I'm actually bullish on gold. Am I buying gold? Yes, I've purchased gold. I've purchased gold at 1160, 1150 and 1140. So I'm certainly bullish on gold, okay, at this juncture. So I'll just basically declare my position in advance. Okay, so whether you want to consider that as an inherent bias that I have in my analysis, obviously that's up for you to judge. Now basically why did I buy gold and why am I bullish on gold? The reason why I'm bullish on gold is because of the bullish engulfing candle that was created on the 7th. Now what was the event that obviously occurred on the 7th? As we all know, the jobs data. Okay, now the jobs data obviously came in weaker than expected, therefore also the average hourly earnings, etc., all weaker than expected. So basically it means that the Fed is not concerned about, or doesn't have to be overly worried about raising interest rates anytime soon, obviously given the fact that, oh yes, the jobs data is above 200k per month, but it's nothing considerable in order to hasten the pace of obviously interest rate hikes. Now there is also a tweet today by one of the Fed members claiming that where is it gone? Okay, where is it gone? Where is it gone? Okay, you can never find it, can you? Okay, so Fed economists say long-term rates may be higher than forecast. Okay, so basically the market's mistiming, mispricing. So that basically means that dollar bearish. Okay, now why did the dollar actually strengthen today? That was mainly led by USD JPY. If you look at a chart of USD JPY, and you'll see and understand as to the reason why. Now there's a lot of economists out there that are referring to the USD JPY chart. So as you can see there, you've got a 60-minute chart, kind of got a 10-minute chart. Look at that thrust higher, and obviously that will result in the move obviously lower on Aussie USD and Kiwi dollar, sterling dollar. Okay, that's basically what you're expecting. Okay, so having said that now, okay, now let's have a look at this in more depth. So let's go back to our gold chart. Okay, so from my perspective, so first of all, we're going to base the premise that the weaker data out of the US is going to cause a weaker dollar. A weaker dollar is going to propel the commodity of gold higher. Okay, so that's one premise or one argument in terms of fundamentals. Argument number two: the Russia-Ukraine standoff is brewing. Okay, Mr. Cameron had something to say with regards to the Ukraine situation today. Miss Merkel had something to say last Friday, and also given the fact that there was a tweet that I read earlier on today with regards to the standoff between Russia and the US and the Saudis with regards to the price of oil. Now, Russia's central bank says even $80 oil is not a problem. Why are they saying that? Because the oil price is being used as a proxy to wage a war between the US and Russia. Okay, so they've attempted sanctions on Mr. Putin. That hasn't obviously worked. So now they want to starve him in terms of the commodities or via commodities. Okay, given the fact that the majority of its income or a lot of its income comes via commodities. Okay. Now, Mr. Cameron, UK to step up pressure on Russia if it continues on its current course, etc., etc., etc. So basically, what we have here is that the ceasefire is certainly under scrutiny at present because there have been a lot of individuals killed on both sides. Okay, and Mr. Putin, the reason why he signed this gas deal with China recently, that itself you should be able to read between the lines. Okay. It basically means that he's securing his interests, okay, which means again that there's going to be an escalation in terms of geopolitics, which will obviously help gold, okay, and that will propel the gold price of gold higher, okay. So that's basically what we're looking at from that perspective. So number one, Japanese QE is helping gold. Number two, geopolitics is helping gold. Number three, ECB QE carrot is going to help gold, okay. And obviously the situation in Iraq right now with regards to ISIS, that is helping gold. The reason why gold price also have been weak as of late is obviously mainly, well, not obviously, but mainly due to the price of oil dropping quite drastically, because oil creates inflation, okay, and oil acts as an inflation hedge, okay. So if oil is falling lower, well, not a hedge basically. It basically oil creates inflation, so therefore if oil prices are going higher, it's cost push inflation. Therefore, you'd want to be purchasing gold in order to have a hedge against inflation. If oil prices are going lower, that's creating deflation. Deflation, obviously, as we know, if gold is an inflation hedge, therefore, if deflation is present, then who would want to buy gold? Okay, and given the fact that the Ukraine situation, the standoff with Russia and Ukraine, that obviously de-escalated. And obviously that's subsided. The Palestinian situation has subsided. The Iraq war, yes, it's ongoing at present. We are sending extra troops, so it is becoming problematic from that perspective. So that geopolitics is certainly coming back, although it did subside at one point. And that's why US equities were moving higher as well. Okay, so a lot of the money is going into equities, hence the reason why gold is not catching a bid. And as we all know, equities are also an inflation hedge. Okay, rather than being in cash, you'd like to be in, which obviously will basically not discount inflation, whereas equities do. Okay, so given the fact that the stimulus is driving equities higher, therefore it's helping it from that perspective. And geopolitics obviously is no longer there. Oil price is dropping by almost $30 down to 80, below 80. Obviously that's helping gold. So these are all the factors basically giving you the history with regards to gold. Okay, so if we go back to our daily chart now of gold, and let's have a look at exactly what's going to happen with regards to gold from a technical perspective. So basically, anybody who's trading gold, if myself included, your stop loss ideally should be below the pivot low there. I mean, you can give it 10%, 20% either side. It's up to yourself, obviously, whatever risk model that you want to follow, okay, from your perspective. Okay, so if you are a trader, so it's an inside bar today. So even though the market has sold off on weaker Chinese inflation data overnight, oil prices did initially rally, but obviously sold off, and that obviously put more pressure on gold, okay. And that's basically what we have here at present. Now, there was an article also with regards to certain members of the BOJ board members obviously being critical of Mr. Kuroda's QE, and he actually just about passing that bill for additional QE. So therefore, his next meeting in November, he'll have a weaker hand. So again, that certainly did weigh on sentiment in terms of gold as well. Okay, and given the fact that obviously global equities such as a FTSE and obviously China was higher quite considerably overnight, money was flowing towards equities, and there wasn't really any real cause for concern. Okay, now so daily chart, you have an inside bar. So provided we hold that green candle, everything is hunky-dory and the market remains bullish. Okay, now we have a 4-hour chart, okay, for which indicates an inverted head and shoulders formation. Okay, so the inverted head and shoulders formation is basically inverted head and shoulders formation on a 4-hour chart. Okay, so basically we have this is your head. Okay, this is your right shoulder, and this is basically what we're looking for. Okay, so this is what I would be observing, and in close proximity with regards to the move on gold. So there's your left shoulder there. Okay, there's your head, which obviously put in quite a solid looking head. Okay, given the fact that we made a base there, we've tried to propel higher. The market's retracing to the 61%, and provided obviously we hold this pivot low at 1132, even if the inverted head and shoulders formation fails, we still have this horizontal support to hold. Obviously if that gives way, then the inverted head and shoulders formation triggers, and up we go. Okay, so that will need to be helped by, number one, the dollar moving lower. Okay, that will certainly need to be, these could be all the potential scenarios. Number one, obviously a dollar moves lower helps global commodities and the bid for global commodities, and obviously gold moves higher with that. Okay, or number two, there's a geopolitical crisis. Okay, and that obviously will send gold prices through the roof. Okay, or or number three, if there's a supply, or if OPEC cuts production, or if there's any supply constraint, whether it be through via geopolitics, that will obviously send the price of oil higher as well. Sorry, gold higher. If oil goes higher, then gold goes higher as well. So bear that in mind. Okay. So these are all the factors at play, and this is what we're going to observe. Obviously, if copper goes higher, then it usually, or silver goes higher, then it generally tends to follow, or gold generally tends to follow as well. Any inflation data that comes out higher than expected, again, gold will follow. Okay. Any stimulus measures or any talk of QE from Europe, okay, again that will send gold higher again. QE4 talk, again gold higher again. So these are all the potential factors that, from a fundamental perspective, that can send gold higher. Okay, so let's have a look at the US dollar side of the equation. Let's just quickly go to a 60-minute chart before I do, and just give you an insight. Obviously, you hit the 200 MA, the market reversed, and that's basically it, really. And focus on the 4-hour chart from my perspective, and that fib 61. If you go below the 75%, IHS formation is out of the equation. Ideally, I mean, the right shoulder has gone quite deep, so even now at this very moment it is vulnerable. Okay, but having said that, given the fact that obviously you've got the 80 trillion QE, ECB carrot still remains dangled. I mean, there was just a tweet recently, I think, by Mr. Constantio. What's his name again? The European chap. Let's have a look here. ECB's merged, sorry, sovereign QE is an option for ECB if needed. So obviously that will help gold as well. Okay, so these are all the potential variables that can propel gold higher. Okay, now that's basically the factor. Now let's have a look at the US dollar chart, because that's going to be crucial in determining whether or not gold goes higher. So okay, so basically what we have here is a daily chart of the dollar, and certainly have put in a red or bearish candle. Okay, post obviously NFP data on Friday. Now we seem to be putting in a potentially lower high here, and a 60-minute chart is something that I'm interested in at this very moment in time. So okie dokie. So given the fact that you have given the fact that you have H&S formation on or inverted head and shoulders formation on gold, you do have this unfilled gap below here, and then you've got an unfilled gap below here, and then you have an unfilled gap below here. So you have 3 unfilled gaps that need to close on the dollar index. Okay, if that's the case, then we certainly need to looking at or paying much, basically attaching a lot of credence to the inverted head and shoulders formation, because this is basically the reason why the inverted head and shoulders and gold will play out, because we have the 20 MA sloping sideways now, indicating exhaustion. Okay, looking for a potential lower high here, and then obviously the market looking to close the gaps below on the dollar index. So that's something that you're going to keep a keen eye on if you're a gold trader, okay, given the fact that there's an inverse relationship between gold and the US dollar. Okay, now the other 2 variables that we can also look at based on intermarket analysis is going to be the Aussie USD and the Kiwi dollar, because they will give you signs of dollar strength or weakness, and certainly give you signs. So on daily chart, it certainly looks weak with regards to the Aussie USD, even though it has been talked down. So that's certainly something that we have to take into consideration as well. Now, what I see here on the 4-hour chart, which is very interesting, again, thinking about the the chart of gold, sorry, on a 4-hour chart, just bear that in mind. You have an unfilled gap above on the Aussie, and what pattern do you notice here straight away? Inverted head and shoulders pattern again. So left shoulder, head, which is a nice double bottom. Okay, and now we're looking at 3-bar move, and obviously the 4th bar reversal. Use your Fibonacci, take it from the pivot low, take it to the pivot high, and there we go. We're at the 50%, okay, which is the fib retracement, and we are in that same zone where previous resistance equals support at the 50% fib. So what does this mean? This means that we're going higher. Now, given the fact that China obviously has moved higher, and the Aussie and the Kiwi generally move in tandem with China, and this move lower here is a buying opportunity. Okay, given the fact that China obviously is bullish, and given the fact that China does consume a lot of gold anyway, okay, that again would support the thesis that the Aussie and the Kiwi are going higher, okay, which in turn obviously means that the dollar is going lower, and the dollar is going lower, that in turn means that the price of gold is going higher. Food for thought, folks. Okay, food for thought. So this is just basically how I trade. This is my style of trading, which obviously is based on the old school way. Mr. Paul Tudor Jones, George Soros, you name it. I mean, all these old timers. This is how they traded. It's based on intermarket analysis, looking at cross asset analysis. Okay. Now looking at a 4-hour chart, that's basically all I need to focus on for now. You've got a double bottom in, looking for a higher low, and obviously the market's going higher, and it's all about that gap fill up there. Okay, so 4-hour chart is your key. Now let's have a look at the Kiwi and see if we can come to the same conclusion. If we do, then that obviously adds weight to our analysis, and certainly does support the view that we are going higher. Now go to a 4-hour chart. Let's have a look at a daily first, actually. Tell you okay, so daily basically is you've got double bottom. Okay, double bottom in. Okay, yes, we have obviously spiked and put in a potential topping tail there on a daily chart, which is slightly cause for concern. But given the fact that the Chinese data was strong, like I said again, well, not strong, but the Chinese economy basically has moved higher. Okay, so let's have a look here. So again, what do you notice? Same pattern. Okay, 4-hour chart, exactly the same pattern. So you've got this inverted head and shoulders formation. So you've got the left shoulder there, you've got the head that's gone in. You're looking for a right shoulder, bang, off we go. Okay, so this is basically the move that I'm expecting for it to play out. So if the inverted head and shoulders formation is looking to be played out here, then what does that mean for the price of gold? It means that we're going higher. Okay, and what does it mean for the price of oil? Potentially higher as well. Okay, so that's something that we're going to keep an eye out for. Now let's just have a look at price of oil anyway, whilst we're observing this. Okay, so you can certainly see here, certainly a strong argument being built. Okay, so the 10-minute chart of oil certainly doesn't look very healthy right now. 60-minute chart, yes, you can certainly argue, or one can argue, that we are into support. You've got horizontal support here, horizontal support here. So we're into the $77 level. Okay, the market obviously did rally as high as $80 almost, and I was certainly gave it all back. Mr. Al-Baradi's comments, or Al-Baradi, whatever his chap's name is, basically looking to actually put a market, or put you call it an OPEC put, okay, on the market. You can call it a Russian put on the market. And obviously, given the fact that China obviously did well, inflation data was weaker, but the the economy, Chinese economy is doing well, i.e. Hang Seng and Shanghai. I mean, you can just look at my Reuters platform here and look at the stellar close in the Shanghai up by 2.3%, and the Hang Seng up by 0.8%. So that's quite bullish. So again, that lends support to the Aussie and Kiwi, lends support to commodities, lends support. Certainly an argument, very strong argument for the markets to certainly, well, from the Aussie and Kiwi to propel higher anyway. So that's basically what we're looking at, okay? The Aussie and the Kiwi to potentially propel higher. There isn't obviously a conundrum with regards to that, because the indices certainly are exhausted. So whether or not that means that obviously gold prices go higher, oil prices, if they were to go higher, nothing significant. But there is a conundrum between equities and commodities right now, and also the currencies. So we'll see exactly what happens. Given the fact that obviously the dollar rally was led by the equity rally, then obviously if the dollar were to fall, then the equity rally more than likely would fall, and money would more than likely rotate towards gold, potentially back into commodities again, because equities certainly seem to be the favorite of the month. Okay, so either way, I'm not going to make this any bit longer now, but just basically keep that food for thought. Oil into support, given the fact that you got gold into support, etc., etc. So that's basically my interpretation. If the daily chart holds, the green candle that I've referred to, if that holds, then yes, we are going higher. Watch out for this right shoulder. Okay, keep watching the Aussie and the Kiwi, provided we get sustained strength there, provided we get the dollar moving lower, provided the yen obviously falls out of favor, or the USD JPY, Euro JPY, then you'll see the gold prices certainly starting to push higher. Okay, so that's risk on, risk off, wax on, wax off. Goodbye now.